Can you operate and function like a bank? Uh,
Right.
we spoke a little bit ago on the phone about what was going on right now today in the market. Like, let's get back to that conversation, right?
Yeah, I mean, you're seeing based on the markets taking a bath today, substantially within not just the NASDAQ, the S&P, uh, all of those, all the above are all taking a beating. And it's the result of the Fed chairman coming out making comments about they're not done increasing interest rates for this year. And in addition to that, making statements along the lines, basically saying hard times, we have to learn to live with hard times. We're gonna feel the pressure of an economic constraints based on higher interest rates, inflation, and they're trying to curb inflation. But at the same time, you could fall into a recession. We've had some conversations of as well. Are we on the verge of that? Yes. Are we there? Not yet. Some people could argue that we already in a recession. It just depends on who you're listening to and who's talking. I just think with what's going on just today is not something that has not been occurring in essence for most of this calendar year. We've been seeing some major ebbs and flows, ups and downs of the market all year long. Today's not abnormal, but because the Fed chairman spoke and the way that he spoke is making the markets react in a negative fashion. That's how impulsive everything is in relation to the financial world. He spoke, one man spoke, and we're seeing this massive downturn because he's the Fed chairman. Well, as a result, it's impacting every single person that has money invested at this point. Whether it's a 401k, like we said, IRAs, if you're buying individual stocks, mutual funds, all those things are impacted today. Not one person that's involved in those markets are being protected from what's happening negatively today. And by having one person make this comment, this is the results. That's how unstable the markets can be. Doesn't mean that they're always this way, but this is how volatile the markets can be. You have to have something to hedge against these types of events. Like we've had conversations before, and I've made this comment to you as well. It's basically like a casino. You don't know if red or black's going to come up today or tomorrow or the next day. You don't know who's going to make a comment and make something like this happen, or make a comment and all of a sudden the market goes up 1,000 points. You just don't know which direction it's going to go. Now, if you're fortunate enough to be involved when the market's going completely haywire in a positive way, great. But what people don't understand is that just because the market's going up exponentially, let's say, compared to what's happening today, that's the overall performance of the market. That's not one piece. No one is completely involved in every aspect of the market when it comes to their finances. No one is. They have a piece of it because they've allocated X amount of dollars into some sort of fund, whether it's Barclays or whatever they're doing, or it might be a target fund within a 401k that people might be familiar with a target date attached to that, meaning I'm estimating my retirement to be around this date. So there's a target fund that it's supposed to be a little more conservative and kind of hedge against some of the ups and downs. But what's happening is we're not isolated from the losses that are occurring. So we're not doing anything to help protect from these types of events. So if you're close to retirement, you're close to a wedding, you're close to a child hitting college age, and your funds are going the wrong direction like today, those are the worst times for that to occur. And that does happen. Or people are in retirement, like we've talked about, they're on a fixed income. So what's happening today? They're taking a loss of their financial assets in addition to drawing from them simultaneously. That's that sequence of risk of returns that we've continued to talk about.
In addition to the fees.
Well, yes. Yeah. And that's something that kind of people ignore, I think, because they're worried about the rates of return. That goes back to the rate of return idea. People are so focused on that percentage and that percentage only. There's so many other underlying factors that I just don't believe enough people overall are paying attention to. And I'm not saying it's their fault. I think it's the reason that we need assistance and need other people to talk to that are doing this and following these kind of things that we're talking about right now every single day. These are things you and I look at all the time. These aren't something that we just kind of casually look at. No, we are looking at these things to make sure, are we putting people on the right path based on conversations that we're having with someone? Today's conversation is different than someone I had conversation with 3 years ago, because the markets weren't doing these kind of crazy things. I'm just throwing out a 3-year period, but I'm just saying every day is different. So when I say cookie cutter approach, we can't bring the same idea over and over and over again to someone. That's a definition of insanity, doing the same thing over and over again, expecting a different result. Well, there's products that are out there that can help protect against these kinds of things. And in my opinion, you have to have them to support other things that you're doing. This can't be the only thing that you're doing, whether it's a 401k, whether it's an IUL, whether it's an indexed annuity, it doesn't matter. All of them work together in some form or fashion, and you have to learn how those can work together. Not just throwing something out there and saying, well, there's that bucket, and there's that bucket of money. Well, how do they all work together? That's what we have to figure out as individuals and learn for ourselves to be able to make decisions when it comes to our own personal lives.
Yeah, and there's a term used out there. It's called a Swiss Army knife of retirement, right? And you really